Welcome to all the participants who have joined today's session. We'll just wait a few seconds. Still, there are a few participants who are joining in. We'll start in the next 1 minute. Yeah, we'll start the session. So my name is Gautam Upadhyaya. I will be taking today's session in derivatives. So it's a very interesting topic regarding option buying and option selling, and on which side you should consider to be on. We'll discuss the pros and cons of both the sides, and I'll try to keep the session as simple as possible. We have explained the content using live market examples, so hopefully the concepts will be much clear. Everything is regarding probability, matlab why there are option buyers, option sellers, what is it that makes option selling attractive, what is it that makes option buying attractive. And I'll try to keep this session as a mix of English and Hindi, because we have participants who wish the content in both the languages. So I'll try to keep it in a simple manner, as a mixture of both English and Hindi. सो इन टुडेज सेशन, आज के सेशन में हम ये ब्रॉड टॉपिक्स कवर करेंगे. फर्स्ट एंड फॉरमोस्ट, बिफोर कमिंग टू एक्चुअल बाइंग एंड सेलिंग ऑफ ऑप्शंस, it is important to frame your view on the market. So that is what we'll be discussing. First, how to frame your view on the market, what is the type of volatility which is there in the market, and based on that, whether you should be an option buyer or an option seller. That is the first thing, framing the view. अगर आपने view market पे बना लिया, फिर the task becomes that much more easier. The most challenging thing is to frame a view, to decide in the next 1 hour or within the next 2 hours of trade, whether the index is going to move on the upside. Today is a sideways consolidation, today is a one directional move in the market. ये पहला व्यू बनाना ही सबसे मेन इंपॉर्टेंट चीज है. That is the challenging thing and the most difficult thing as well. And once you have framed the view, then based on your risk appetite, your capital allocation, you can decide on the strategy that you want to consider. अगर आपको हाई प्रोबेबिलिटी स्ट्रेटजीज चाहिए तो वो कंसिडर कर सकते हो, लेकिन उनमें रिस्क रिवॉर्ड उतना नहीं रहता है. देन इफ यू वांट टू कंसिडर हाई रिस्क रिवॉर्ड स्ट्रेटजीज, यू शुड सी दैट यू आर लिमिटिंग अ सर्टेन पॉइंट ऑफ योर कैपिटल. तो आपका कैपिटल का एक सर्टेन अमाउंट ही उस पर लग जाता है. सो दीज आर द डिफरेंट थिंग्स दैट यू हैव टू कंसिडर व्हेन यू आर फ्रेमिंग द व्यू ऑन द मार्केट. पोस्ट दैट हम लोग प्रोबेबिलिटी टर्म्स में हम लोग डिस्कस करेंगे कि ऑप्शन सेलर्स क्यों रहते हैं. अगर रिस्क उनका सबसे ज्यादा रहता है ऑप्शन सेलर्स का, then why do they consider to take a position in the market? We'll consider the various three scenarios. See, market में at any point of time there are only three types of scenarios which can happen. Either the index can go on the upside, that is that is in Monday's trading session Nifty can witness a 200 point movement on the upside, or there can be an absolute sideways consolidation, या फिर Nifty can move on the downside. So these are the three broad things that can happen on any particular day. And that taking all these probability scenarios into consideration, we'll be discussing why there are option buyers, why there are option sellers, what is it for the option buyer, and what is in there for the option seller. And lastly हम लोग डिस्कस करेंगे, other than doing naked buying of call and put options, which are the type of hedge strategies that you can consider. In terms of option selling करके भी hedge strategies आप कौन से कर सकते हैं, based on your view on the market. That also we'll be discussing in today's session. तो ये सारे ब्रॉड टॉपिक्स है जो आज हमारे सेशन में हम लोग कवर करने वाले हैं. एंड टुवर्ड्स द एंड ऑफ द सेशन we'll be having a Q&A point regarding the topic itself. Yeah, so let's get started with the topic. फर्स्ट लाइक आई मेंशनड, सबसे इम्पोर्टेंट जो है वो है व्यू बनाना मार्केट के ऊपर. व्यू बनाने के लिए द मोस्ट ऑफ द ट्रेडर्स ऑन अ डेली बेसिस मेक यूज ऑफ चार्ट्स. तो चार्ट सबसे इम्पोर्टेंट चीज है व्यू बनाने के लिए. दैट इज बिकॉज प्राइस एक्शन इज अ वेरी कंफर्टिंग थिंग. अगर आप प्राइस एक्शन कंफर्टेबल हो, दैट इज वन ऑफ द मोस्ट कॉमनली यूज्ड methods to gauge the direction of the market. That is through making use of technical charts. So along with this, along with the technical data, along with price action, what most of the analysts combine is derivative data. So there are many traders who just make use of technical analysis, but we believe that if you combine technical and the derivative data, your view gets you are able to take much more informed decisions. The confidence level improves slightly while taking positions in the market. See, there is no one solution for trading in the market, and derivative data also is extremely dynamic in nature. मतलब एक घंटे पहले जो derivative data रहेगा, it can keep on changing on a constant basis. So it is not a hard and fast formula based method that 2 plus 2 is equal to 4 type of thing. It is always based on probability. All technical trading is based on probability. There is no certainty in technical analysis which can say that even though the most beautiful chart which is in front of you can definitely fail, and there is no guarantee in trading. But if you practice the same thing over a period of time, अगर आप लगातार वही पैटर्न, योर स्किल सेट्स इफ यू अप्लाई ओवर अ पीरियड ऑफ टाइम, definitely if you maintain the appropriate risk rewards, you will come out at the on the winning side. So what we always advocate is first look at the charts, then make use of the derivative data. See, we have different sessions for taking the entire content of derivative data. तो हम लोग derivative data के ऊपर हमारा separate webinar रहता है, जिसमें हम लोग basics of put call ratio कैसे interpret करते हैं, option chain को कैसे interpret करते हैं, all that has been covered in these sessions. Today's session is regarding the last topic. Once you have looked at the charts, once you have validated it with derivative data, what are the type of strategies that you can consider? Selecting the optimal strategy based on your risk capital. That is what we'll be discussing in today's session. सो ऑप्शंस जो है बहुत ही एक वर्सटाइल प्रोडक्ट है. फ्यूचर्स क्या है? इट इज अ लीनियर प्रोडक्ट. आपको तेजी लग रहा है तो आप फ्यूचर्स में एक लॉन्ग पोजीशन बिल्ड कर सकते हो. लाइकवाइज इफ यू हैव अ बेरिश व्यू, you can take a short position. But in options it is a much more versatile product. Versatile means you can make use of options in different scenarios. You can combine different legs of the option and come out with the different strategies. तो मार्केट के सिनारियो के बेसिस पे यू कैन कम आउट विद डिफरेंट ऑप्शन स्ट्रेटजीज. सो दैट्स व्हाई इट इज नोन एज अ मच मोर वर्सेटाइल प्रोडक्ट. इसके बहुत सारे अलग अलग मार्केट सिनारियोज में भी काम आ सकते हैं. इवन दो व्हेन द मार्केट्स आर एब्सोल्युटली साइडवेज, यू कैन कंसिडर टू डू ऑप्शन सेलिंग and still come out on the profitable side. So we'll be discussing on quite a few strategies as well in today's session. Before moving on to the option strategies part, let's discuss the absolute basic. See, there are 4 parts towards option buying and option selling. We'll just discuss it briefly before moving towards the strategy parts and the option selling, option buying part. We'll just discuss briefly. See, whenever you have, there will be a lot of traders in today's session who already have a very good knowledge of the topic. But there will be people who are freshers and who have just joined the markets and do not have that much knowledge regarding the content. So for the benefit of everyone, let's just start with the basics once and then move forward. So in option trading, there are 2 legs to it. See, one is the call option side and the other is the put option side. If you have a bullish view on the market, that is, if you feel that Nifty at the current juncture, which is trading at 23,450 levels odd, you feel that from here also the index can move on the upside, then the strategy that you can consider is buying call options. Likewise, if you have a bearish view on the market, you feel that the Nifty index has run up significantly and that there could be a correction on the downside, कि आपको लग रहा है कि Nifty has rallied significantly post the election verdict as well, and before the budget there can be a significant correction, then the strategy that you can consider is to buy a put option. बट फॉर एवरी बाइंग ऑफ एन ऑप्शन देयर इज एन एग्जैक्ट ऑपोजिट लेग एज वेल. मतलब आपको ऑप्शन बाई करना है तो कोई सेलर भी तो रहना चाहिए. एंड दैट काउंटर पार्टी, जो सेलर, जो ऑप्शन का सेलर रहता है, he tends to have an exact opposite view of what you hold in the market. तो आपको अगर तेजी नजर आ रहा है मार्केट में, then the call option seller has the exact inverse view on the market. उसका व्यू रहता है कि इंडेक्स एक साइडवेज कंसोलिडेशन में रह सकता है या फिर एक करेक्शन आ सकता है मार्केट में. And that is why he goes ahead and does option selling. There are other reasons as well. We'll discuss it. That is the benefit of time decay, why he considers option selling, and what are the benefits that an option buyer gets. All that we'll discuss in the future slides. But let us understand the views of each of the traders who takes a position in the market. And it is very important to understand all the four participants. That is a call option buyer, a call option buyer, a call option seller, likewise a put option buyer who has a bearish view on the market, and his counterparty. एक पुट ऑप्शन बायर का काउंटर पार्टी होता है a put option seller. The put option seller has a bullish view, flat to bullish view on the market. See, a put option seller will make money in the market if the index witnesses a sideways consolidation or if the index moves on the upside. So clearly understand who the counterparties to each and every trade are. It is very important to understand the participants of the market. There are four different participants like I highlighted in this particular slide. There is a call option buyer, there is a call option seller, likewise there is a put option buyer, and there is a put option seller. I hope everyone is clear with each of these terms and in which scenario does a trader considers which view. Now there will be a lot of confusion if whether to be a call option seller or to buy a put option buyer. But as we go through each of the examples in detail in the following slides, all of these concepts will be much more clear. Yeah, so moving ahead, the first strategy, that a basic thing what most of the traders consider is whenever there is a clear breakout on the charts, it can either be in index options or it can be in stock options. Whenever there is a clear one trending, one directional move in the market, the most common thing that most of the traders do is to buy a call option. So buying call options is one of the most simplest things, or the most simplest strategies that traders consider in the market. Likewise, you can buy a call option if there is a breakout on the charts or if you are expecting a rebound in the market. ये नहीं है कि हर बार आपको breakout पे ही options buy करना है. आपको लग रहा है कि एक particular level पे support test करके there is a pullback which is expected in the market. In those scenarios as well, you can consider to buy a call option. Likewise, ये particular example एक पुराना example है, but this is a very good example where the index, that is Nifty, took support near the 200 EMA levels and witnessed a bounce on the upside. तो जो लास्ट का जो मूविंग एवरेज है वो एक 200 डे EMA लेवल से, एंड उधर से निफ्टी ने एक अच्छा खासा बाउंस बैक दिया था. So it is important to track the various technical parameters, the zones where you expect the index to witness a rebound on the upside, and in those levels you can consider to buy call options. So now let us take examples of practical current market levels and discuss with the examples how you go about buying a call option and when you can consider to do option selling. So the first example that I highlighted is currently Nifty अगर आप देखोगे is trading closer towards 23,450 levels. So this is approximately around 230, 245 when I was preparing the slides. That's the levels that the index were trading at. So in this particular scenario, there are traders who expect that in the current week as well, the index will continue the positive momentum and Nifty can go ahead and test the levels of 23,800, 23,900 levels on the upside. So in such case scenarios, traders can consider to buy call options. तो मैंने एक एग्जांपल लिया है, द प्राइस ऑफ द 23,600 कॉल ऑप्शन जो है उसका प्रीमियम जो था 72 रुपीज था. So anyone who has a bullish view on the market can consider to purchase this particular strike, and it is to purchase this particular strike you have to pay 72, which is the premium, into the lot size. See, keep into consideration derivatives में जो भी trading हो जाता है that happens on the lot size basis. मतलब हर एक security के साथ there is a lot size which is associated. So with Nifty the lot size is currently 25. ये revise होके 25 पे आया है. Previously the lot size was 50. Currently the lot size for Bank Nifty is 15. Fin Nifty के लिए जो lot size जो रहता है that is at 40. And for mid cap select जो mid cap का एक index है उसके लिए lot size 75 का है. So that is very important to note, especially जब भी आप stock options में trade कर रहे हो. Knowing the lot size of that particular contract is very very important. Many people will think that the lot size for everything is 25 or 50, but that is not the case. हर एक stock के लिए lot size अलग रहता है, and it is very important to know the lot size because your profit and loss everything is dependent on the lot size. Every 1 point move will result in profit equal to the lot size. So if you take a small cap stock or a stock which has a huge lot size, मान लो एक वेदांता जैसा stock जिसका lot size काफी बड़ा है, तो even a 1 point movement will give you significant profit or loss in such counters. So in this particular slide, I am just highlighting that if you want to buy a call option, you will have to pay around 1,800 rupees. That is 72 into 25. That results in a premium of 1,800 rupees. तो ये पर्टिकुलर स्ट्रैटेजी में इफ यू बाय अ कॉल ऑप्शन यू एंड अप मेकिंग मनी इफ द इंडेक्स दैट इज निफ्टी मूव्स अबाउट द ब्रेक इवन पॉइंट. एक ब्रेक इवन पॉइंट का भी एक कॉन्सेप्ट रहता है. इट इज इंपॉर्टेंट टू नोट दैट where the break even point comes for each particular strike price that you have purchased. See, if you are doing scalping या intraday trading, ये आपको important नहीं है. The break even point concept does not come into picture. आपको सिर्फ प्रीमियम पे कॉन्सेंट्रेट करना है. आपने सपोज 100 रुपए पे बाय किया है, वो अगर 120 130 चला जाता है, यू कैन कंसिडर टू क्लोज आउट योर पोजीशन. बट द कॉन्सेप्ट ऑफ ब्रेक इवन कम्स इनटू पिक्चर व्हेन यू डू पोजिशनल ट्रेडिंग या फिर यू कैरी फॉरवर्ड द पोजीशन ऑल द वे टिल एक्सपायरी. तभी ये ब्रेक इवन पॉइंट का कॉन्सेप्ट आ जाता है. फॉर कॉल ऑप्शंस द ब्रेक इवन पॉइंट दैट इज द पॉइंट वेयर यू एंड अप मेकिंग मनी इज द स्ट्राइक प्राइस दैट यू हैव परचेज्ड प्लस द प्रीमियम. तो हमने परचेज किया है 23,600 का कॉल ऑप्शन प्लस 72 दैट इज द प्रीमियम फॉर दिस पर्टिकुलर स्ट्रैटेजी. सो द ब्रेक इवन पॉइंट टर्न्स आउट टू बी 23,672. तो इंडेक्स अगर इस लेवल के ऊपर बंद दे जाता है एट द टाइम ऑफ एक्सपायरी, देन we'll end up making profit in this particular strategy. So that is on the buying side of the option. Now take the scenario of selling of the same option. See, if you want to buy 23,600 call option, there should be someone who's willing to sell you the 23,600 call option as well. Now it is important to understand why there are people who are willing to take this risk even though the chart looks extremely bullish. I'll explain it in terms of probability as well, and that time the concept will be much more clear. Why does someone go into option selling? Now let's just discuss what is his view and what is the profit that he is going to make if the market remains sideways or on the downside. So for a person who's selling the 23,600 call option, his maximum profit is restricted to the premium that he receives. See, agar aap option buyer hai, you can make unlimited profit. It is theoretical. No one makes unlimited profit. It is just that if the index witnesses a sharp rise, you can make large amounts of money. But the maximum profit that an option seller can make, एक option seller जो है उसका maximum profit is restricted to the premium that he receives right at the start of doing the option trade. तो मतलब अगर उसने आपको option sell किया है, उसका maximum profit 72 rupees रह सकता है. 72 into 25, that is 1,800 is the maximum profit that an option seller can make. You will be thinking, why would someone go and take this particular risk? But that is where the concept of probability, the profitable scenarios comes into picture. That I will take in the next slides. Why do people want to do something which has a fixed lock-in profit, and why do they want to consider doing option selling? But here it is important to understand that the premium that you pay is 1,800 if you want to purchase a call option, while for the seller the maximum profit that he can make is through the premium that he receives. That is 1,800 is what he makes. Now coming to if see, the view is the same. If you have a bullish view, you can consider to buy a call option. The second strategy that you can consider is to sell the put option. अगर आपका व्यू तेजी का है, what you can do is you can also consider to sell the put option and make money. This is where a selling strategy comes into picture if you have a bullish view on the market. The view that you hold is that the index will close about 23 or 22. See, here it is mentioned 22,500. It's a mistake on my side. It is 23,500, which is the current levels of the index. So if the index gives a closing about 23,500 levels, you will end up making profit in the market. So that is a strategy where you do option selling if you have a bullish view on the market. So these are two strategies that you should absolutely understand, that if you have a bullish view on the market, you can either buy a call option. That is the very most simplest thing. The other thing is, if you have slightly higher margins, you can consider to sell a put option and end up making profit in the market. That is if your view goes right. Now coming to the second part is, first you have a bullish view, then what are the things that you can consider. Now in this slide you can see that if there is a particular breakdown in a particular stock or an index, then instead of buying options, the strategy that you can consider is to buy a put option or sell a call option. तो आप ये चार्ट में clearly देख सकते हैं. There is a clear breakdown on the charts. So there is negative sentiment associated with this particular security, and आगे जाके भी selling pressure आ सकता है ये particular counter में. So what you can do in this particular scenario is you can consider to buy a put option, or you can consider to sell a call option. So the strategy that you can consider is you can buy the 23,500 put option. इसका प्राइस लगभग 90 रुपीस पे, so that is the premium. So 90 into 25, which is the lot size of the Nifty contract. So 2,250 is the total premium that you pay towards the seller of the put option. तो ये पर्टिकुलर स्ट्रेटजी में once you buy a put option, you end up making money as long as the index is trading below your break even point. See, it is important to know that when you buy a call option, your break even point, see, once again I am stating, it is very important to know, अगर आप एक intraday trader हो या scalper हो, then the concept of break even does not come into picture. You are only focused on the premium. The premium should increase from the point that you have purchased. If you buy something for 100, it should go to 130, 140 levels. You can immediately book out profit. The concept of break even comes when you consider to take your position all the way till expiry. You should know in which particular scenario you will end up making money. So for call options, it is the strike price that you have purchased plus the premium that you have paid. That is the break even point. For put options, it is the strike price that you have purchased minus the premium. That is your break even point. So these are two very different things in terms of break even point, but it is very important to understand where you will actually end up making profit in these particular strategies. So this is the example of put options. So put options, when you buy, it is the strike price purchased minus the premium, which is your break even point. So 23,500 minus 90, so 23,410, that will be your break even point. So when, as long as the index closes below 23,410, you will end up making profit in the market. So if you are an option buyer, there should be a counterparty to you. There should also be a put option seller. The view of a put option seller is that the market or the index will give a closing above the levels of 23,500 at the time of expiry. So we have the expiry on 27th of this month, and the view of the option seller is that Nifty will give a closing above 23,500 levels. That is why he considers to sell the 23,500 put option. The maximum profit that he will make through this is 90 into 25. That is the maximum what is going to make. So now, since the lot size, you understand that now option selling has become much more easier in certain extent. The reason for this is previously the lot size for Nifty was 50. So when the lot size was 50, the margin amount collected by the broker to sell one lot of Nifty was approximately 1 lakh, 1,10,000. But since the lot size has been revised to 25, currently the margin amount charged by the broker to sell one lot of Nifty is around 60, 65,000. So the margin amount has come down considerably, and the flavor of option sellings actually has come into the market since 2016. The reason I will state why option selling has become so famous in the last few years. See, 2016 is when NSE launched weekly contracts. See, first weekly contracts were launched in Bank Nifty. Post that, since the huge popularity of weekly contracts, we got weekly contracts in Nifty as well, and from Nifty we have further moved to Fin Nifty, weekly contracts of Fin Nifty, and from Fin Nifty we have moved to Mid Cap Select. So now in four different indexes, that is just of Nifty, of NSE, we have weekly options. Once weekly options came into picture, the rate at which the option premium decay happens has improved, or considerably reduced the time frame of option trading. So that is why a lot of people have come on the option selling side. They want to capture the fast decay of option premium. It is a huge challenge. It's not that it's an easy thing to capture option premium decay, because there is extremely swift type of movement in the market. But that is one of the main reasons why such a huge influx of option sellers have recently come into the market. They are trying to capture a fixed return on a capital amount. So they try to capture anywhere between 2 to 3% on a weekly basis. That's what the general target is. But it is quite a challenging thing. But I'll explain it in terms of probability, in terms of risk reward, and why it works out evenly if you're an option buyer or an option seller. So the other strategy, if you have a bearish view on the market, so you can have a bearish view, you can buy a put option. The other thing is selling of call options if you have a bearish view on the market. तो आपको लग रहा है कि इंडेक्स 23,600 के नीचे ही बंद देगा. In that particular scenario, what you can do is you can sell the 23,600 call option. The total premium what be is at the start of the selling of the option will be the maximum profit that you can end up making. So this is a very clear thing that everyone first, this is the most important thing. Once you understand these four legs: option buyer, call option seller, put option buyer, put option seller. Once you understand these four legs of the trade clearly, you understand what is the break even point for each of these traders, then you can come out with any type of strategy. Any strategy you will be able to understand once you are able and clear with these four strategies and their break-even point associated with each of these four strategies. So for an option seller, that is for a call option seller, like I highlighted, you end up making money if the index remains below the price at which the price which you have sold. So manle you have sold 23,600 call option. So for you, the break-even point would be 23,672, because the price of the call option that you have sold was 72 rupees, and you add it to the strike price. So the strike price for both the buyer and the seller is the same, and that's what you should understand. Now coming, I hope everyone has understood till now the difference between an option buyer and an option seller. Now coming to the slide where I will explain it in terms of probability, why there are option sellers, why there are option buyers in the market. So like I highlighted at the start of the webinar, that at any point of time, koi bhi scenario lo, there are three outcomes which can happen in the market. So in Monday's trading session, which is the next trading day for the market, Nifty can trade on the upside. So the index can move 200, 300 points on the upside. What is the chance that the index can do this is 33%. See, there is 100, everything has 33% chance. Markets moving on the upside, there is 33% chance this can happen. Markets नीचे आ सकता है, इसका भी 33% chance है. And the markets remaining absolutely sideways, there is 33% chance of this particular event as well. Because there are three events which can happen at one point of time in a day. So I hope everyone is understanding what I'm saying, that at any trading day, at any trading point, there are three events which can happen. The markets can either move upwards, the markets can move downwards, or there could be a sideways consolidation in the market. Now coming to the probability for an option buyer. So suppose there is a call option buyer he will end up making money only if the index moves on the upside. So it is, I hope everyone is understanding what I'm saying. If you purchase the 23,600 call option, you will end up making money only when the index moves on the upside. If there is a sideways consolidation or the index moves on the downside, you will end up making a loss. So for you to make money, there is 33% chance associated with option buying and making money. I'll discuss why would anyone go into option buying also. Now everyone's mind will be just, if there is 33% chance, why should be I should be an option buyer? I should be on the option selling side. So now let's discuss what is the probability of an option seller. See, an option seller makes money if the markets move on the downside. That is, if you are a call option seller. So if you are a call option seller, you make money if the markets move on the downside, or even if there is a sideways consolidation in the market. So I hope everyone understands that there is, in option selling, your probability of success is much higher compared to option buying. But there is significant risk associated with option selling as well, and the margin requirements are also much more higher. See, 62,000, right? 62,000, 65,000, right at the start of the trade itself, you have to pay to the broker as a safeguard, because there is considerably higher risk associated with option selling compared to option buying. The other point is in terms of return on investment. See, when you buy a call option, there is a good chance that if your view goes right, you can make very high return on investment of your capital deployed. But that is not the case with option selling. Option selling may, there is a fixed amount of return that you will make even if you get 100% of your view right. मान लो कि आपका व्यू 100% सही जाता है, फिर भी your capital or the return what you will be making is restricted to the premium that you received right at the start. उससे ज्यादा आप कभी प्रॉफिट बना नहीं सकते. So this is where the catch comes into the picture. In option selling, the probability of success is very high, means higher than option buying. That is 66% chance of making money. But in option buying, even though you have 33% chance of making money, your return on investment can be significantly higher. So in the long term, when you balance it out, option buying and option selling, it is there is no clear one way strategy that you should be. There are a lot of people who go by that कि हमको option selling ही बहुत फायदेमंद हो जाता है, but that is not the case in the current choppy markets that we are witnessing. If you are not managing your risk properly, option sellers can be chopped off left, right and center. So इतना volatile होता है कभी कभी, and that's where being an option seller becomes extremely challenging. But then there are many times in the markets wherein the markets just don't do anything. They go into a sideways consolidation. So even though you do not get your view right, आपका view नीचे का था या ऊपर का था, but you are an option seller, but still you will end up making money because the markets witnessed a sideways consolidation. And even in those scenarios, a call option seller or a put option seller can still end up making money in the markets. So I hope this particular slide is clear to everyone. This is where the concept of probability comes into picture, and you understand that why there are option sellers in the market and what is the chance of making money through option selling, but what is the catch also associated with option selling. So now I'll just mention the multi-leg hedging strategies that you can consider through option strategies. So instead of just buying a call option or put option, we'll discuss hedging strategies through selling. It's not just through buying. Through buying, you can do the normal bull spread strategy or the bear spread strategy. But I will explain how you can do hedging strategies on the option side as well. So this is a chart, the same chart. It is a breakout that the particular stock has witnessed or the index has witnessed. So instead of just buying of a call option, what as a strategy that you can consider is you can sell the at the money put option. Kindly understand what I'm saying. You can sell the at the money put option. That is, if the markets are at 23,500 levels, you can consider to sell 23,500 put option. And in order to safeguard your position, means see, in option selling there is risk also associated. So you cannot do naked option selling, positional naked option selling. That's very risky. So what you can consider to do is you can sell 23,500 put option, and simultaneously you can buy 23,300 or 23,200 put option. तो इस मेथड में you receive premium. It's not that you are paying premium, you receive premium. Premium will be slightly less because it is a hedge strategy. See, hedge strategies will not give you unlimited profit. It's a limited amount of capital that you will get through a hedge strategy. But I just wanted to highlight what are the different methods that you can deploy your capital and strategies that you can consider. So it is known as a credit bull spread strategy. The reason why it is known as credit bull spread is in a credit bull spread strategy you receive premium in your account. मतलब आपको पैसा आता है आपके खाते में. Whereas in a debit strategy you pay the premium and you take a position in the market. Here you are taking a position but you are receiving premium in your account. So that's why it is known as a credit strategy. Many times you will get confused between a credit strategy, debit strategy, bullish strategy, bearish strategy. ये अलग अलग methods में आपको थोड़ा confusion हो सकता है. But if your concepts are clear and your basics are clear, you will not get confused in such terms. See, bullish means your view is bullish. But even if you have a bullish view, you could have a credit strategy or you could have a debit strategy. Here it is a credit strategy wherein आपके खाते में पैसा आता है, wherein you have a bullish view on the market, but the strategy is a credit strategy wherein you receive premium. Likewise, you could have a bullish view and you could have done a debit strategy as well. Buying of a call option is a debit strategy where you pay premium and you take a position in the market. So I hope everyone is clear with these concepts. What is meant by credit strategy, what is meant by debit strategy, what is a bullish view on the market, what is a bearish view on the market. Likewise, that the first example was on the bullish side. The second example is on the bearish side, wherein you do a bear call spread strategy. So the bearish strategy, this is a strategy wherein you have a negative view on the market. आपको लग रहा है कि इंडेक्स में या स्टॉक में सेलिंग प्रेशर रह सकता है. सो व्हाट यू डू इज यू सेल द एट द मनी कॉल ऑप्शन एंड यू बाय अ स्लाइटली हायर आउट ऑफ द मनी कॉल ऑप्शन. इसका रीजन ये है कि आपको पोजीशन प्रोटेक्ट भी करना है. सी, सेलिंग ऑफ कॉल ऑप्शंस लाइक आई मेंशन्ड इज स्लाइटली रिस्की. कल अगर आपने मान लो रिलायंस का कॉल ऑप्शन बेच लिया एंड टुमारो देयर इज सम पॉजिटिव न्यूज इन रिलायंस which takes the stock 4-5% on the upside, gap up open हो जाता है, then you will end up making significant losses because आपको टाइम भी नहीं रहेगा रिएक्ट करने के लिए. the movement in the market is so swift. So that is why when you are doing option strategies, kindly consider to do hedge strategies. और ये साइमल्टेनियसली करना है. ऐसा नहीं कि आपका पोजीशन रॉन्ग जा रहा है तो फिर आप कंसिडर करने के लिए सोचते हो. बाय द टाइम you consider to do that, almost a lot of capital will be wiped out. So right at the start itself, when you're taking the position, you have to do the hedge strategy. So in that particular strategy, like I mentioned, you have to sell the at the money call option and you have to buy a slightly out of the money call option to hedge your position. This is regarding the risk reward associated with each of these strategies. So in this particular pyramid, you can see the risk associated with each of these strategies. अगर आप option buying कर रहे हो या option buying कर रहे हो, it has the least amount of risk associated with it. अगर आप option selling कर रहे हो, that is naked selling of call option or put option, then there is slightly higher risk associated with these strategies. So it is important to know कि आप जो आप पोजीशन ले रहे हो या स्ट्रेटजी अपना रहे हो मार्केट में, उसके साथ क्या रिस्क रिवॉर्ड एसोसिएटेड है. सो प्लीज अंडरस्टैंड द एंटायर स्ट्रेटजी कंप्लीटली बिफोर टेकिंग एनी पोजीशन इन द मार्केट, बिकॉज इन डेरिवेटिव्स एवरीथिंग इज वेरी टाइम बाउंड. मतलब आपके पास लिमिटेड समय है कोई भी पोजीशन में आपको पैसा बनाने का. लाइकवाइज कैश मार्केट में कैसा है, आपका व्यू गलत भी जाता है तो आपके पास टाइम है, समय है. आपके पास अगर कैश पोजीशन है, you can hold it for a considerable period of time, but in derivatives you just have a very limited time span to get your view right. So right at the start itself आपको पूरा strategy समझना है and उसके बाद ही आपको strategy अपनाना है. See, so I hope everyone understands that and kindly do the due diligence in terms of risk reward. Derivatives is definitely a double edged sword. जब भी आपका व्यू सही जाता है आप काफी पैसा बना सकते हो, but if you do not maintain the appropriate risk reward, you can face considerable losses as well if the view goes against you. So kindly maintain strict stop losses, do position sizing when you do derivative trading. These are the last three important things that I want to highlight when you do derivative trading. Kindly maintain a stop loss in all the trades that you take in derivative. Do not do any trade in derivative without a stop loss unless you have decided pre-hand itself that it is a hero zero type of trade, wherein you know that the markets can be extremely volatile. You have fixed a certain amount of your capital and left it for the market to decide, wherein there are certain days wherein happens that multiple times the option premium may fluctuate and then ultimately move in one direction, but those are one off days or very few instances. In most of the other trading days, it is extremely important to maintain a fixed stop loss. See, the reason why I will tell you it is important to maintain a stop loss, in the previous presentation also I had explained the same example. See, certain times you will be buying the option premium at suppose 100 is the premium, and generally you should maintain, when you're trading in Nifty, you should maintain a stop loss of approximately 25 to 30 points. So 30 points is the stop loss that you should consider to maintain. If there will be many times when the option premium may just come towards 65, 68 levels, just touch your stop loss and once again move towards 100, 110 on the upside. This is just one of instances. मतलब 10 ट्रेड में दो बार एक बार हो सकता है, but if you do not maintain a stop loss, there will be a lot of instances when the option premium will move directly from 100 towards 20, 25 on the downside. फिर 20 से आपको कैपिटल वापस 100 करने में आपका बहुत डिफिकल्ट हो जाएगा, बिकॉज दैट इज ऑलमोस्ट अ 5 टाइम्स रिटर्न ऑन द कैपिटल दैट यू हैव, एंड दैट इज अ वेरी चैलेंजिंग थिंग. सी 20 रुपीज से ऑप्शन प्रीमियम को 100 रुपए पे लाना, दैट मीन्स द इंडेक्स शुड विटनेस अ सिग्निफिकेंट रिबाउंड इन द मार्केट, and that is a very tough thing. So that's why we recommend that however challenging the markets are, kindly consider to maintain a stop loss. The next point is regarding leverage. Leverage भी बहुत ही बढ़िया चीज है जब आपका व्यू सही जाता है. जब भी आपका व्यू गलत जाता है, there are a lot of challenges with leverage, because लिवरेज इज डेफिनेटली इट इज अ डबल एज स्वॉर्ड. जब भी आपका व्यू सही जा रहा है, आपका कैपिटल मल्टीपल टाइम से बढ़ रहा है, लेकिन जब भी आपका व्यू नेगेटिव तरफ जाता है, योर कैपिटल कैन गेट इरोडेड टू अ ग्रेट एक्सटेंट. सो जिस हिसाब का मार्केट है, सपोज इट द मार्केट्स आर वेरी चैलेंजिंग, वेरी चॉपी इन नेचर, देन कंसिडर टू रिड्यूस द लिवरेज. जब भी आपका व्यू सही बैठ रहा है मार्केट के ऊपर, जब भी आपको कॉन्फिडेंस अच्छा खासा है मार्केट के ऊपर, एंड यू आर on a winning spree, that time you can consider to gradually increase your leverage, and when you have the confidence of trading in the market. That's an end of today's session. I hope I was able to convey the content in a very simple manner. Now we'll have the Q&A session. Participants who have any questions regarding the presentation can ask questions in the current time. Thank you. Kindly restrict the questions to the topic itself. Other than the topic, I will not be able to take any stock specific or any position specific queries at the current juncture. So I kindly request the participants to keep the queries regarding the topic itself. Thank you. So I'll just go through the questions, the chat section one by one, and we'll see if we have any questions. So there are a lot of recommendations or suggestions also that definitely we will carry forward to the concerned team. Please do note that any suggestion that you post, we definitely carry forward to the concerned department, and I will definitely share it with the teams. So there is a question, how to relate ask and bid. So bid ask, how to relate it. So this thing bid ask spread, it is known as, it is also known as impact cost. So I'll just explain it through, if I'm able to understand the question rightly, I'll just explain what is coming to my mind at present relating to bid ask. See, you should always trade in contracts which are extremely liquid. The reason for this is the difference between the bid ask is known as the impact cost. See, अगर आप एक extremely liquid segment में trade कर रहे हो, wherein the bid ask is extremely narrow, you will not be facing any impact cost. If you are trading in an illiquid script, if see especially in the FNO segment, there are around 200 stocks which are there in the FNO segment, 150 to 200 stocks which are there. But there are, it is just the top 20-30 stocks which have extremely good bid ask spread. अगर आप बाहर के कॉन्ट्रैक्ट्स में ट्रेड करोगे ऑफ illiquid stocks, there is a huge difference between the bid ask spread. Now let us take an example and understand what I am trying to say. Suppose you want to buy something at 100 and the seller is quoting at 105 for an illiquid script. See, अगर आप एक extremely liquid stock में trade कर रहे हो या script में trade कर रहे हो, if you want to buy at 100 and 100, the seller will be quoting 100 and 100.10 paise or 100.05 paise. That's how liquid the markets are. But for illiquid stocks, the quote can be even 2-3 rupees or 4 rupees higher. Now take an example that the seller is selling at 105. So right at the start itself, you have faced a 5 rupee loss in the trade because you want to purchase the stock, but the seller is quoting 105. So that is known as impact cost, wherein you have lost 5 rupees even before taking the trade. Now take the reverse scenario. You want to sell something at 100 and the seller and the buyer is quoting 95. Once again, there is an illiquid stock. There is no seller. I mean, there is no buyer at the current juncture. So you want to sell something for 100 and the seller and the buyer is quoting 95. Again, you will face the impact cost, 5 rupee loss while selling as well. So always consider to do trading in stocks which are extremely liquid. This is how the concept of bid and ask comes into picture, and it is important to know how you can place trades wherein you are on the favorable side. Try to place orders wherein market, don't try to always jump behind price action. Sometimes you can place orders at a fixed price, wherein if the price witnesses a pullback to that particular range, then you can consider to do the position. So there is a question which explains how to explain the concept of weighted average concept. See, yeah. So weighted average is applicable to everything. It is known as some. It is also known as VWAP, weighted average price. In option trading, also weighted average comes into picture. See, there are certain softwares which help you this, which directly help you. See, weighted average is nothing but what is the average price at which the most number of contracts have traded. See, you cannot judge the who's the seller at what particular price, but what you can calculate is you can find out what is the maximum number of contracts which have been traded and what is the average price at what it has been traded. So if there is an option seller, suppose take the example that 23,600 call option, the average weighted average price, that means the maximum contracts have traded at an average premium of 50 rupees. So that is where the maximum number of contracts have traded, and at an average premium of 50 rupees. So now where the option seller will face problem, when the index moves above 23,650, because the premium has to be added. So that is why it is, that particular level is known as the resistance. Maximum contracts have traded at that particular price of 50 rupees, and that means maximum sellers have sold 23,600. So if the maximum sellers have sold at that particular price, if the index moves about 23,650 in trade, then that is where the panic comes into picture for them, and that is where heavy short covering can come into the market. So that is why it is important to identify levels wherein the weighted average picture comes into play. So I hope I was able to explain it. There are certain softwares, or if you are regularly tracking the option chain also, you will know that at which prices there is maximum option writing taking place. So should we buy any put or call before the closing of market? This is absolutely a no. The reason for this is no one knows how the next trading days are going to open. Even though the chart structure may look extremely bullish, there is no way any trader can predict the next trading day's outcome. It is always better if you are taking a position also, always take it in a hedged manner. Do not buy naked call or put option. Always do it in a hedged manner. What I'm saying is, if you are buying a call option, purchase, suppose you are buying 23,600 call option, one way to hedge it is sell 23,600, 23,800 or 23,700 call option along with it. So the strategy which is known as a bull call spread strategy, wherein you are locking your profits and losses right at the start. Never do a positional trade in the index on a naked basis. See, if you are doing intraday trading, scalping, that is, on an intraday basis, you are still in front of the screen or in front of your mobile. So if your trade goes wrong, you can always close out your position. But if you buy a naked call or a put option and you carry forward your position, and the next trading day, if there is a gap up or a gap down opening, your capital will be significantly wiped out. So that is why we never recommend any naked buying of call or put option on a closing basis. We always tend to avoid this particular strategy, even when the markets look extremely one directional. Even in those scenarios, we do not give one directional call. All the strategies that we recommend from our side are in the form of a hedge strategy. So there is the same question regarding bid ask, how to view it in a trend. So this is also a slight challenge, because the bid ask window, there are certain windows where you can constantly see the bid ask. There are a lot of traders who do trading based on bid ask also. There are very skilled traders who constantly be monitoring the quantity or the price at which constantly bids are coming, and if there is a breakout above a particular level and there is strong quantity of those particular bids which are coming at a particular level, that time the trader identifies that there is very good buying interest in a particular stock. Likewise, if the bid ask spread, if there is heavy selling at a particular level, so bid ask can be so you have to be a very skilled trader to identify this particular pattern. That's what I would say, because there are windows. It's a window, because see, just by the quantum it is difficult, because the reason for this I'm saying is, you are not disclosing your full position, because the exchange allows you to disclose, I think it is 1/10 of your position. So even if you want to buy 100 shares, you can just disclose 10 shares that you want to purchase and put your quote. So it is not so easy to track the bid ask quotes and identify trends. But if you are a skilled trader, you can identify the price levels at which there is good interest of buying of stocks. And once there is a breakout above that particular level with volumes, then you can identify that there is a strong uptrend and there is strong buying interest for that particular counter. So how to decide the SL and target? See, I agree that many times the SL may just be hit and there may be a rebound. You always have to maintain the SL in the system. How to decide it? Most of the time when we give a trade in index, if you are doing index scalping for Nifty, what we do is ideally we maintain a stop loss of 20 to 25 points. The reason what I'm saying is, why 20 to 25 points of the option premium is, if the index moves about 50 points against you, that time your stop loss will be hit. And if you are a scalper, if you know that if the index has moved 50 points against you, you more or less know that your view has gone wrong. Because in choppy markets it may happen that these candles can be very fast, that is just in a 2-minute candle the index can move 50 points also. But in normal trading days, if the index moves 50 points against you, more or less you know that your view has gone wrong and it is better to close out your position. So for Nifty, if you're trading in index options, the ideal stop loss, if you're a scalper, that is, please understand what I'm trying to say. If you're a scalper, if you're doing short term trading, can maintain a stop loss of 25 to 30 points. That's a good stop loss. But if you are a more positional type trader, you can consider anywhere between 30 to 40 points of the option premium, that is. But more than that, if you are an intraday trader, I would not suggest, because the index gives you multiple opportunities during the day. It is better to maintain small stop losses, get stopped out, take a fresh position. As long as your risk reward is favorable, as long as your strike rate is favorable, do not worry much about the stop losses. And the part regarding targets, see, in targets also it is a challenging thing in options. You cannot capture the entire target. You have to maintain comfort that whatever profits that you have got is good enough. Trying to capture the full trend is extremely challenging. You will have to close out your position and take a fresh trade. That's the challenge with derivative trading. The movements in the options are so fast and so swift that it definitely becomes a challenge. That even though you may say that you have got 100 points in profit and the index is continuously rising, it becomes a challenge even for the most seasoned traders. The only thing is you can close out that particular trade, or you can trail your stop losses, continuously keep on trailing your stop loss at higher levels. That's one thing what you can do. That if the option price is rallying from 100, 150, 180, then keep on trailing your stop loss by about 30, 40 points or that much lower, and keep on taking your trade higher and higher. That's one thing what you can do. So there is a question, why the reason for HPCL and BPCL has halved. The reason for this is, I think so, there was a bonus issue in these stocks. If I'm not split, bonus or stock split, one of the two things has happened, and today is the date itself. That is 21st is the date. So I think more or less it is bonus which has happened in HPCL and BPCL, if I'm not wrong. If not bonus, it is stock split, but most likely it is bonus which has happened in the stock price of HPCL and BPCL. So whether one should take into consideration IV to choose between call and selling of a put, buying of a call. See, this is a very good question. See, what traders consider is that when the markets, see, there are two ways of looking at it. When the IV is increased significantly, that means that there is heavy volatility in the market. When there is heavy volatility in the market, it means that the prices of options can move very fast and very swiftly, because the range has increased in the market. The safe type of traders consider, what they consider to do is they consider to buy call options, means trade on the options buying side. The reason is the movements can be swift, so if you get your view right, you can make considerable amount of money. Now there are contra traders who feel that the IV is very high and there can be an IV crush. So if you are very confident that the IV has reached the extreme bands, that means from here onwards there could be a crush in IV, then they go into the option selling side, wherein the IV which has hit 25, 30 levels, there could come back towards levels of 15 on the downside, just like how it happened post the election verdict. So, but you should be very confident that there could be an IV crush to be an option seller. The relatively easier thing is to be on the trending side. As long as the IV is increasing, be on the buying side, because we never know when the IV is going to actually crush is going to come. IV can keep on increasing and we never know when the actual band is hit and there could be a reversal. So for this, there is no one clear answer which will tell you that at this particular level of IV you should be an option buyer, and at these levels you should be an option seller. But that's how the mentality works basically. The risky traders will assume that the index has hit the higher end of the IV band and there could be an IV crush. That's why they would go on the option selling side. But the risk takers would say that the IV could further increase even at a particular level, and they would still be on the buying side. So there is a question from Rakesh Kumar, which is the best time frame candle in intraday. See, if you're doing scalping trading, and if you are a Nifty trader or a Bank Nifty trader, the candlestick that I use at my end is the 5 minute chart, because a 5 minute chart is relatively good. It minimizes the whipsaws to a great extent. and that's where I'm comfortable. It requires you to become comfortable with it. Previously, we used to take about 15-minute candles as well, but since the volatility of the markets have increased so high, you cannot do scalping or intraday trading now with 15-minute candlestick patterns, because the index will move by 200 300 points within a 15-minute time frame. So an ideal time frame that I would recommend would be a 5-minute time frame. Get comfortable with it, see to that your eye is or you have got comfort with this particular time frame. So 5-minute time frame is good enough if you're doing scalping trading. First, see the charts on the daily frame as well. So you see a weekly chart, you see the daily chart, then you're comfortable that the overall trend of the chart is good. So then on the 5-minute chart, once you find support levels or you feel that the stock is rebounding, you can consider to trade on this particular time frame. So the top-down analysis also works good. The last question that I will take is from Vivek Bhatt. So the question that he has asked is the option chain to judge support and resistance, but the option chain keeps on changing. How to get better at it? So definitely the option chain is dynamic in nature, but there are days when you will get to know that there is exceptional option writing. So you should know more or less that what are the days where there is average option writing, where there are days when there is exceptional. So yesterday was a very good example of significant option writing from the FIs we saw. If you see the end of the day data, there was nearly 250,000 option selling call contracts as well as put option contracts. So if you see the range, it was 23,600 is where uh, 23,600 is where there was exceptionally high call writing. So if you add the average premium, 23,630, 640, that's where the index formed a high as well. So you add about 30-40 points on the upside. And on the downside, if you see yesterday's trading session, 23,500 put option at exceptional high put option writing. So about 30-40 points average premium of yesterday's trading day. So 23,460 was the support on the downside. So I agree, it's quite challenging. If the levels get breached, you have to form fresh views on the market, and that is why the challenge comes into picture. But there are definitely days when you are able to predict with a good amount of degree based on the above average levels of option writing, whether the what the range could be. It's all in terms of probability. Once again, there is nothing through option derivative data or OI data which can tell you with certainty that this is the range, but it's all probability. It helps you to further strengthen your view. That's all that is there in this particular data. Yeah, so that's an end of today's session. So there is a question regarding OI as well. So I'll just please note that OI is nothing that but the open positions in the system. मतलब एक कोई भी point पे आपका OI मतलब open positions, that is what is basically told by the open interest. So at any point of time अगर आप आज के end of the day पे निफ्टी का 23,600 कॉल का OI देखोगे, that is open interest. मतलब at present there are still these many contracts which are open in the system and have not been closed out. See, volume and OI are two different things. Volume is the total number of contracts that are traded. ये open भी है, close भी है, सब कुछ gets involved in volume. But in open interest, it is basically telling you that the open positions at any point of time. तो आप जान सकोगे ये पर्टिकुलर ऑप्शन चेन का अगर आप एनालिसिस करोगे, यू विल क्लियरली कम टू नो कि एट एनी पॉइंट ऑफ टाइम व्हाट आर द ओपन पोजीशंस इन द सिस्टम. सो पुट साइड पे भी आप देख पाओगे कितने जन का व्यू क्या है बेस्ड ऑन दी ओआई डेटा. सो ओआई डेटा को जनरली यू इंटरप्रेटेड फ्रॉम द ऑप्शन सेलर्स पर्सपेक्टिव, नॉट फ्रॉम द ऑप्शन बायर. फॉर एवरी ऑप्शन बायर देयर इज एन ऑप्शन सेलर, but the OI is generally interpreted from the seller's perspective. The reason for this is the higher capital that the option seller puts in to take a position in the market. So we believe that if there is higher capital which is involved, he'll have much more knowledge, we can say, and taking his position. That's why option data, that is OI data, is generally analyzed from a seller's perspective. In the rest of the sessions also that we'll be covering in derivatives, we'll take this concept of OI, PCR, option chain in much more detail. So anyone who has interest in these topics also will kindly join our future webinars that we'll be having in the next few weeks. So that's an end of today's session. Thank you so much to all the participants for having taken the time out and having attended the session. I hope I was able to convey the content in a relatively simple manner. Thank you. Have a good day. Thank you.